What is up, guys and girls, and welcome to Deck Does Investing. This is episode 2 of my dividend investing journey. And since the last update video, I have added another £300 capital to the portfolio and have made one new investment. That investment being in Johnson & Johnson, in which I purchased 2 shares for an average price per share of £110.78. If we jump into Simply Wall Street, I'll give you a bit of analysis and my reasons why I purchased Johnson & Johnson. For me, Johnson & Johnson is the godfather of dividend stocks. It's one of the most famous dividend stocks out there. It's a dividend stock that I've owned previously in my other dividend portfolio. And in my personal opinion, it's just a stock that every dividend portfolio owner should try and incorporate into their portfolio. For those of you that don't know who Johnson & Johnson are or what they're about, basically they're a massive pharmaceutical company that researches, develops and manufactures healthcare products. And they are one of the major players in their field with a huge market capital of £381.8 billion. If we jump a bit more into the financial analysis, Simply Wall Street currently undervalues the company by 31.4%. As I've said in previous videos, for me, this is a great buying opportunity, and I see this as me getting in on a great company like Johnson & Johnson at a discount. I have the utmost faith that Johnson & Johnson stock price will increase within the next year, if not year upon year, and I should see some nice capital appreciation gains from it. If we have a look at the dividends, the most important thing, Johnson & Johnson is currently yielding at 2.62%, which isn't nothing crazy, but again, it's just a nice ballpark figure and something that, combined with them paying a dividend for 40 plus years, is something that I'm very happy to sort of take on, and something that, combined with their dividend coverage of 69%, it's a very sort of safe and stable dividend. And hopefully, that will increase year upon year. My final thoughts on Johnson & Johnson is that I'm not expecting it to double in price or, see some really mad growth in the near future. It's just not that sort of company, in my opinion. But with the the steady capital appreciation and the safe dividends and reliable dividends that it does pay, it's sort of a staple stock that I want to add to my portfolio, and keep receiving those dividends year upon year and growing the portfolio, and hopefully, again, like I've said, with the capital appreciation, increase that yield on cost. So if we jump back into Freetrade once again, I'll give you a rundown on all the individual stocks. If we have a look at HSBC, I'm currently up 0.8%, with a gain of £4.75. Unilever, I'm up 0.54% with a gain of £2.56. And finally, my newest addition, Johnson & Johnson, I am currently up 0.41% with a gain of 90p. So all my stocks are green, which is a fantastic start to this this dividend investing journey. However, it's only been a week. I'm not getting ahead of myself. To be honest, I've been monitoring this portfolio for the past week, and up until today of recording this video, all of the stocks have been in red. So the true test will be, months down the line, if not years down the line. I'm not here to try and time the market. I'm in this for the long haul, and I know the power of sort of compounding interest and and the steady capital appreciation that solid dividend stocks hold. So that sort of wraps up this update video. It's been a quick one, but there hasn't been much to sort of cover. So I'll leave sort of one parting question with you guys, and that is, who else owns Johnson & Johnson? And what sort of returns are you currently seeing on your investment on Johnson & Johnson? So if you've liked this video, please give it a like. If you like this sort of content and want to see more, please subscribe. And until next time, peace.